Hi everyone, welcome to the second episode of our podcast. My name is Dheeraj, I am your host. I am the founder at boomerangs.ai, which is a corporate alumni engagement platform. This episode is going to be very different from our previous episode. We generally invite HR leaders, but today I have invited a banker and an ex-banker. Meet Rajesh Kalipurath, who has been my friend, my well-wisher, and he is actually my ex-boss in two of my previous organizations. Rajesh leads the corporate banking treasury for Axis Bank in South of India. He has been a banker for more than 25 years and he is one of the best minds that I have come across in the financial world. Then we have our another guest, Priyan Subramaniam. Again, another gem of a guy, a very close friend. We knew each other, Priyan, for more than 10 years, I guess. Priyan has been a banker, then he got bored and then he moved into HR tech, something very similar to me. Priyan leads enterprise sales for Darwinbox. Welcome Rajesh and Priyan.
Hey, thank you, Dheeraj.
Thanks, Dheeraj.
Thank you very much to both of you for taking out time for this.
Our pleasure.
Hopefully this will be enjoyable. We will have a lot of fun.
Expecting this to be amazing.
And please feel free to fight among each other.
So Rajesh used to be my ex-boss as well.
Yes,
so
that's true. Rajesh was ex-boss to both of us. That's why we invited him. We didn't have any other option.
Yeah. So that's the key thing, right? That's the only reason I get to be here. Hey, thanks again. Very nice of you to do this.
Thank you, Rajesh. Rajesh, we are going to talk today about one of the oldest and the most important asset classes of all, which is gold. Now, gold has been hitting the headlines. The price of gold in the past 3 years has moved from around 5,100 rupees per gram to around 10,000 rupees per gram last week. In dollar terms, if I had to say, it moved from $1,700 per ounce to $3,300 per ounce. So it has been basically a 100% jump in the 3 years. But these 3 years also has been a very turbulent period. For example, there is a war going on between Russia and Ukraine. There is a war between Israel and Palestine. There are skirmishes between India and Pakistan. And then there are problems happening in Syria, Yemen, etc. I want to understand from you, why does gold become so important during these uncertain times?
Okay. Now, the principal way of looking at it is gold has always been a safe haven asset simply because it's a physical asset, right?
Okay.
There are very few physical assets in the world which are a good store of value.
Okay.
So you have real estate. Real estate, unfortunately, is not movable.
Correct.
So if you can really look back, there are very few movable physical assets that are such a larger store of value. You have diamonds, but with diamonds you never know how they're valued, what is the resale value and stuff like that. There is silver, of course. Silver is unfortunately not as large a storage of value as gold is. Then there is platinum, which is very rare and things like that. So gold, in that sense, has that very unique thing that it's valuable. And traditionally, people have looked at it as a safe haven asset.
Got it.
And in hindsight, probably rightly so also, right? In India, the allure to gold has always been a slightly different reasons. It's not been a risk haven asset, or it's just there is that love for the asset, love for jewelry, actually not really the asset also.
Yeah.
And people have been traditionally buying gold. Now, to come back to your point as to why in times of turbulence and uncertainty, gold has value. One is the risk haven thing. Two, whenever you have a turmoil like this, your other risk assets tend to get hit very badly, right?
Okay.
Equities, which is the largest asset class out there, gets hit very badly when there is any kind of event, right? Be it the pandemic, be it a war-like situation that happens. So I guess that makes the gold the easier alternative, right?
Got it.
Maybe I want to add a few more things on that because we are fundamentally looking at how gold prices increased. Like Rajesh said, safe haven is definitely one big thing. But fundamentally, gold price, because it's an enduring store of value, depends on the real yield. So inflation adjusted interest rate. If the interest rate falls down against inflation, then naturally any risk asset price will increase.
Correct.
So that is one fundamental factor. The second other factor, apart from safe haven demand, is central bank purchases. So the last few years we've been seeing dollar assets to be slightly riskier in the sense that you saw what happened with US freezing Russian dollar reserves. So people are trying to move away from dollar. There's no other way to diversify your foreign exchange reserves. So central bank demand has been very high, and certain other things have happened, which I'm sure we will cover. For example, what happened in Turkey, etc. With India, there's this other factor of exchange rate. So Indian currency is depreciating. So that adds more.
Actually, that's a very good point, because when you buy gold, you also buy dollars.
Yeah.
Right.
Yeah. True.
So it's a nice way of getting into two asset classes at the same time.
Correct.
Yeah.
That is very interesting. In fact, this is a very good segue, Priyan. You have told some of the underlying factors with respect to price movement, but just for our audience, can you explain in more layman terms what makes gold prices go up or down? What are those 3-4 important factors which impact the gold prices? And please explain it in layman terms.
Absolutely. So maybe I'll start with the definition of value, right? How will people think of something that has value? So it could be people were buying Pokemon cards, for example, because temporarily they were high value in people's minds.
Yeah.
But gold as an asset has always had value from the beginning of time, because as Rajesh very succinctly explained, that was the smallest highest value movable sort of store of value. So now maybe we're looking at currency notes, but God knows what will happen in the long term, right? It could be anything. So that gold has always been there as the one asset class. So when you compare that, it's more in terms of there is supply demand.
Yep.
Any price fluctuation is explainable with respect to supply demand. So if there is more demand, gold has constant supply. So you can't suddenly increase the supply with increased mining. How did actually gold come to earth, right? I mean, that's a question, in fact, I thought about only yesterday. So it came from stars bursting into themselves and getting back into different planets. The only way we can increase the supply of gold is to go into other planets and mine them.
Or maybe dig deeper into earth.
That's of course there, but the cost will increase. The other way, the old alchemists, they were trying to create gold, right? We have figured out a way. So you can use particle accelerators, but the cost is 1 trillion times more than the existing price.
That is also temporary in nature. Na? It just, from lead to gold, it just reduces the number of protons that they are having, but it's temporary in nature. The moment you take it
permanent.
You can make it permanent?
They figured it out.
Wow.
But
That's
it's
very
too expensive.
Okay.
So it's not possible. So supply remains constant in this case. So demand is what drives in layman terms. So demand can increase in in situations of safe haven. People need something to carry, right? In times of crisis, what can you carry which has the maximum value? From the fundamental nature of humans, that's how this whole thing started. Safe haven. And if I have money, if I invest, it's opportunity cost of investment. If I get, if things are going very well, the economy is doing really well, I'll invest in equities. But otherwise, then gold is the easiest to invest in. So these are the two fundamental drivers. And supply demand again brings in low seasonality. So during India and China festive season, people buy more gold. Or there could be temporary issues. Suddenly the government puts in certain controls, then gold price premium will increase. Those are temporary issues.
Those are temporary.
But long term, it's purely on money supply. The more money that is available, the replacement value of gold is constant. So as per inflation, it will keep going up.
This is very interesting. In fact, I have a point to add here, and do let me know if it makes sense, Rajesh. See, gold is mostly priced in dollar. That's how the world works, right? So if the dollar prices are going up, dollar is becoming stronger, the demand for gold will obviously go down and the prices will come down. And I believe this is what most of the people think.
Yes.
In fact, I want to project a graph here. If you see, this is gold versus dollar index movement. I see in this graph, there is an inverse proposition. For example, typically from 2010 to 2015, there is an inverse proposition. Blue one is dollar index, the orange one is gold index. But there are periods, specifically if you see from 2017 to 2020, both dollar and gold have moved in the same direction. Similarly, somewhere close to around before 2010 also the similar thing happened. And for the past couple of years, maybe 22, 21, that period around also the similar thing happened. Are these like exceptions, or do you think these are like accepted norms owing to certain situations this is bound to happen?
I think these are exceptions, yes, but I honestly don't think this correlation will matter so much going forward. Now, look at it this way. The conventional logic for this inverse correlation is that when dollar loses value, that means other currencies, so gold becomes attractive
Yeah.
in other currencies, right?
Okay.
For example, dollar to rupee is 86 today. If dollar to rupee goes down to 70, it makes gold in rupee terms more attractive.
True.
More cheaper rather. Attractive, I don't know, but cheaper for sure. So that was the conventional logic
Correct.
there. Now I'm not sure that really holds good anymore.
Okay.
But the thing is, these correlations tend to become a rule over time, right? The correlation between oil and gold, oil and dollar, dollar and gold. And so this has become a very accepted practice. So, and also one more thing that sort of lends to this correlation is hedge funds, the larger hedge funds, when they invest in metals, they tend to use the dollar index as a hedge. So that also sort of contributes to this whole thing a little bit. But my sense is this correlation was there, and these times you referred to were exceptions. But there were also, in fact, if you go deeper into that time frame, there were also very large bouts of change. So, for example, 15 is when you had the yuan revaluation.
Yeah.
The yuan revaluation really helped bring down gold prices.
Okay.
Because dollar went up quite a bit.
Dollar went up.
So I guess these are exceptions for sure. But I believe that this rule itself may not be valid anymore. It still is to some extent.
Okay.
In fact, the last say 1 month has been proof that the rule is very strong and buzzing.
Correct.
We have seen dollar fall 10% and gold I think has risen 10%. So it's perfect correlation, inverse correlation rather.
Got it.
But I don't think this will last.
Got it. In fact, I did some research. While you said this is exception, which is true. Like as you said, the common sense is if dollar is going up, the gold will go down.
Right.
Or if there are uncertain times, the gold should ideally go up. I saw, and I hope I am correct, but during this India-Pakistan skirmishes,
Okay.
and before that when Ukraine-Russia war also started,
Okay.
of course the knee-jerk reaction was gold prices going high.
Right.
Which is okay. India is a very large economy, Russia is a large economy, and Europe was getting involved in that war.
Correct.
But I think after some time, the gold prices started going down. And it was not profit booking, which a lot of people say. I don't believe it was profit booking in terms of gold. But I believe since other asset classes were going down, people had certain positions which they had to close positions, they needed cash.
Awesome.
And one of the asset classes which became a sacrifice was probably gold.
Quite possible.
So my question to you is, can this be predicted in terms of uncertain times? For example, if I want to do a short-term trade, would you advise me to take this position whenever such major macro geopolitical event happens? You basically go short gold in a short term, and then in mid-term to long-term you go long gold.
I would.
You would.
Yes.
Okay.
In fact, look, in the sense, okay, let me put it this way. If I foresee a major geopolitical, it's really very difficult to foresee these things, but if you think you are in the midst of a geopolitical event, my immediate reaction intuitively would be to go long gold.
Okay.
But I think I really agree to your point that, when, other assets are also falling at a faster pace, and for me to probably average out or, buy more of those assets, will I liquidate my gold holdings to move here? Quite plausible. But intuitively, my first reaction would be to go long gold.
Okay.
Because, that's a tactical thing more than a strategic
And that's
thing.
true. Fair. Makes sense.
Yeah, interesting. And maybe in the medium term, go short.
Go short.
Because anyway, things will get controlled.
Yeah.
Geopolitics.
Yeah,
absolutely,
US will come to mediate between all the countries.
And unilaterally announce ceasefire.
Absolutely, yes.
Interestingly, there's one more thing. US, for example, I think has the highest gold reserves right now. So 94%, because obviously no point in holding dollars. So given the present debt deficit, etc., they're planning to sell a lot of gold. So again, coming back to your point about people because
Are you sure they are planning to sell a lot of gold?
Yeah,
I'm not sure. Okay.
Okay.
That's
see,
what
my understanding is, US of course has the largest gold reserves. At what price are they valuing the gold? They are valuing the gold, I think, the per ounce price is close to $3,300, right? They are pricing their gold at close to around $50 or $60 because that has what they have been doing historically for the past 50-60 years. So there has been no audit.
Okay.
Whatever gold is there. Okay. So in case if they want to actually control their federal deficit, they simply need to revalue the gold. Right? Then everything will be very good for the US. But they're not doing it. So given this situation, and this is a fact, I find it very difficult to believe that they will try to resell the gold. They just need to reevaluate it. So their balance sheet size will automatically increase. In fact, there was one point you were saying, Priyan, earlier, central banks buying gold, and you said this is one of the reasons why the gold prices move up and down. And we have seen a lot of this, especially India and China. We keep hearing India is buying, China is buying, and then we link it with all those theories of they trying to float their new currency under BRICS. Well, we'll go to BRICS later on, but this we have been seeing. They have been buying. And the rate of central bank buying gold has increased significantly over the past 3, 4, or 5 years. First of all, why do central banks buy gold? And why it has been that they are buying gold this aggressively?
So central banks have to maintain reserves. They have, so usually they do it in the form of US treasuries and maybe some combination of Japanese yen or euro and other currencies, right?
Got it.
And long term, euro has not been doing excellently well as a block, or even Japan is not doing fantastically well. US is the only proper safe one, but they need to diversify out. They can't put all their eggs in one basket. So gold seems to be like one of those things that they have. And secondly, while I'm not a complete believer in this, it's not an exact hedge against inflation is what I feel, but still it is, right? It is, that's what the long term it is. So that's again one reason for them to fundamentally hold it. But in the recent past, incidents like Russian dollar reserves being frozen. So US ultimately controls your reserves. Nobody wants that for themselves, right? So the pace of diversification has increased.
That's true. That's true. In fact, for our audience, I will add here, when Russia and Ukraine war started, whatever dollar reserves of Russia was there in US, and I guess Europe also, both those dollar and euro reserves were seized by the respective governments. So basically, Russia doesn't have access to billions of dollars worth of both their dollar and euro reserves right now.
Yeah. And the interesting segue is, apart from the usual culprits, many other central banks also started doing it. Turkey was one famous example. Even like Poland, for example, suddenly became like in the top 20.
Poland, I think, is the largest buyer of gold, I believe, right? I mean, I was surprised.
This year or something, like recently it is the largest one?
Yeah, something like that. I mean, I can't recall right now, but yeah, they were there in the news.
They don't believe in the euro concept at all. I think the right-wing leader won this time and they don't like EU.
Anyways, so maybe.
That's interesting. So Rajesh and Priyan, we have already established that the gold and dollar prices are interlinked, kind of, right? And we all know that there is a big dollar dependence in the entire world. In fact, Donald Trump has been saying the same thing. If you see, countries are trying to move away from it. Like for example, Russia is pushing for a new BRICS currency. China is doing a lot of bilateral deals with so many countries and settling the trade in their local currencies. The idea is to move away from dollar. And we see this. Dollar reserves are continuously falling down. So there is going to be a new economic order, which is sure, after 5, 10, 15, 20 years, we don't know. My question to you is, in this economic order, will gold be that architect of new payment system? Like maybe the currency is getting linked to gold or something like that? Or you see the second largest currency in the market, euro. Euro will take that lead. I don't believe the European Union is right now ready. But what do you think? They will probably try to pick this up?
Let me answer this in two parts. One on the FX reserve status, dollar reserve status. No, the dollar is about 58%. You had a chart also. So 58%, 58-60%. It's been there for some time, around that range. Now the question is dollar's reserve status done or not? Right. Now you can answer that in two ways. One, what is the alternative to dollar, which is the second part of your question, and does dollar actually deserve to lose its reserve status or not? If you look at absolute, I'll answer the second part first. If you look at the absolute fundamentals, yes, probably dollar does not deserve to be there. The country runs a $36 trillion debt position, which is quite there. 7% fiscal deficit. Current account deficit, I am not sure about the numbers, but it's like, it used to be $1 billion a day. When I started my career in markets, it's 5 times that now. So in that sense, fundamentally, no. The US does not really deserve to be the country whose currency has to be the world's reserve currency. But then we go back to the first part of the question. What is the alternative, right? Of course, Euro rather, is the next best alternative. But the problem for Eurozone has a fundamental problem. Eurozone Euro is only a monetary union. It's not a fiscal union.
Okay.
So that makes anything and everything very difficult, right? So till things are good, it's fine. And if you just go back to the sovereign debt crisis in Europe 13 years ago, 14 years ago, the amount of things that needed to be done to get Europe back from what was a very small default, right? Greece defaulted of all the countries, right? And look at what it took for the Eurozone to bring things back into shape. And it took them 7 years to recover from the blows of it.
True.
Right. That's because they're not a fiscal union. They're only a monetary union. That's a big lacunae there. Second, China, I don't think so. Look, China will need to do a lot more things to get to that status. And that's probably the only other country which can really stand up and say that, look at us, right? UK is 5% of the world's global reserves, and that's honestly, for want of a better word, a Dabba economy. Literally nothing going for it, right?
Yeah.
Especially after Brexit. But I don't think even Brexit was when we were working together, right?
Yeah.
So after Brexit, they never really got back to where they thought they will get to, right? So TINA there is no alternative, is a problem when it comes to.
But do you think gold is not the right alternative?
That I think there is a chart I have.
Okay.
$15.3 trillion is the value of gold that's already been mined and is out there. We mine 4,000 tons a year. 4,000 tons value-wise is how much? It's not much. And you have enough consumers buying it. There's various. So will gold be enough? Will the supply of gold be enough to sort of satisfy the entire thing? Okay, one more thing to note here is reserve addition in the world plateaued out in 2019. So
what do you mean by that?
So no more additional reserves are coming into the market.
Gold reserves. Okay.
No.
Sorry.
Central bank reserves. So central bank reserves plateaued out.
Central bank reserves of gold or overall central bank?
Overall.
So you're saying all central bank reserves combined have plateaued out. So someone is going down, someone is going up. Overall sum is plateaued out.
Yes.
Ooh, very interesting.
Yeah. So that's a phenomenon that's been there for 5 years. That's only because only China keeps producing these surpluses, but there is someone who runs a deficit, right?
Yeah.
So the incremental came because guys like India got started building on their reserves. Nobody's building the reserves anymore. We're probably the only country talking about reserves. Honestly. Sorry, but we need to, right? We are still a current account deficit country, so we need to sort of still think of reserves. But nobody really cares about reserves anymore from a central bank perspective. So yes, that is the point where you are right. Gold will find a place there because if the amount of reserves is not going up, right, then the supply of gold is enough for banks for central banks to diversify into gold.
And I think this is one of the reasons always quoted why people moved from gold-based system to a fiat currency system. The supply is very low. So it's not enough for everyone. So the people do not have a lot of fiscal power because the currency is tied to gold.
Correct.
Interesting. Again, would you like to add anything here? Do you see the emergence of euro or gold in any other avatar?
Like Rajesh said, absolutely not euro. And also to add on to China.
No one likes euro.
China will definitely be there, but it's a completely closed economy, right? There's no capital or current
convertible also.
Absolutely. They don't let money go out at all. So it's not there. Now, the only two options are what Rajesh has listed, gold and Bitcoin, right?
Bitcoin, okay, very interesting.
Right, in the future, we are thinking futuristically, it could be 20 years, like you said. So gold, definitely yes, but the whole world the monetary system was pegged to gold in the past.
Yes.
And there was a reason why everyone unpegged themselves in 1970,
Right.
Because you couldn't do stimulus, you couldn't do a lot of things, right?
But it was because everyone said we don't want a gold-based system, or Richard Nixon in US said I don't want a gold-based system, and he moved away all the countries from gold to fiat currency.
It started with Richard Nixon, but I think every other country also wanted to get away.
Because they also, even if they wanted to continue, they did not have an alternative.
They didn't have
right.
Okay, fair enough.
So there are limitations to a gold-based system, and also think about payments, right? It's not only about the reserve or the monetary system. Also think about payments system. So probably maybe not the way we envisage Bitcoin, but in the future, if we can figure out a way to do this better. Right now, the SWIFT system, and both of you are well aware of how it works. Like there's so many charges, and it's so inefficient as compared to, I'm sure, a completely first principles grounds up if you can devise a payment system, maybe through Bitcoin or could be some other alternative.
Any blockchain,
It can really work very well.
This is very interesting because I also see a lot of people keep on talking about dollar or gold or some other currency and all these hi-fi terms, which we are also doing to some extent. But we always miss the fact that the ease of exchanging money is very important.
Yes.
SWIFT comes into picture. The reason the gold and dollar are like in limelight, again, one of the reasons is SWIFT. If SWIFT gets replaced, probably we'll see the emergence of new currency. Yeah. But here, one thing I want to ask you. You talked about crypto, very interesting. A lot of people feel that crypto is all fluff. It is not backed by anything. While you talk about that the value of the crypto is limited, especially Bitcoin, the value of the Bitcoin is limited. Value means the units of the Bitcoin are limited. That is why it has its value. But do you really think that it can replace dollar? Because if you say it can replace dollar, I don't see a universe where gold will have a value then.
Yes, very good question, in fact. And ultimately, I go back to the first statement I made on how do you define value, right? Will people see value long term in something? So gold has always been there. Dollar is presently there in the last 50, 60 years and probably another decades.
Okay, fair enough.
Now, dollar will not continue, will definitely not continue, right?
True.
What else will replace it? Maybe right now could be, the reason why we think it could be a store of value is because we think the supply is definite and limited.
Yeah.
Again, as long as it cannot be hacked, right? The whole blockchain.
Right.
That's the reason. Now we see quantum computing coming. I don't see major breakthroughs, but we've been hearing about it.
Yes.
And it is a distinct possibility that in the next 5 years, it will happen, right? Then Bitcoin is of absolutely no use. So there has to be something else. It doesn't have to be Bitcoin, but there will be something
Something similar,
is
yeah.
unhackable.
Yeah.
And
Got it. So the conclusion is none of you see any other major currency in the foreseeable future replacing dollar.
yes.
And while you see the importance of gold, but you do not see that we will move to a gold-based economy. That is not going to happen.
Yeah, that'll be again going backward in time.
That is going backwards in time.
Yeah, it's like some things can't be undone, right? And
Yeah.
so this cannot be undone.
Very
There's
interesting.
too much money out there now.
Got it. Okay, now that you have said that gold is not going to be that important a player that it will replace dollar, should people buy gold today? And especially when the gold prices are so elevated.
Look, people should not buy gold today.
Okay.
Should they buy gold? Yes.
Okay.
So wait for a correction and buy.
Okay.
Look, in fact, now that we're talking about precious metals, right?
Yes.
Okay, why I think you should not buy gold today is one, it's just too overpriced right now. The reasons why it went up, and gold also, if you go back, gold has tends to have these periods when it just gets stuck in a small range. I think we're slowly getting into that phase. If you really want to look at precious metals, this is slightly off topic, but do look at silver.
Okay.
In silver, there is a lot of value. So there is this measure that the commodity market guys use. This is the gold to silver ratio. So this is basically gold price divided by silver price, simple.
Yeah.
So 3,500 divided by 3,500, right?
Yeah.
And we were at 100 just 2 days ago.
Yeah.
So whenever the ratio goes beyond 80, 85, that usually means that gold prices don't fall. They can also fall to bring down the ratio, but usually they don't fall. You see silver prices going up to bring down the ratio back below 80. I think there is value there, but you should buy gold, but not here.
Not here.
Not here.
And if people have to buy gold, what is that one instrument will you prefer? Will you recommend to people in India?
ETFs.
ETFs.
Yes, cheap,
That's sure.
very cheap, very liquid. Lots of them out there. You don't have to store it. Safe. You have to get locker. You have to get.
Yeah.
Yeah. So yes, absolutely. If STVs were around, I would still say STVs, but they're not likely to be. So ETFs.
Got it.
One more thing on that, Rajesh, there is ETFs and there is mutual funds. I think the tax treatment is slightly different.
Yes.
Indexation and non-indexation. So why would you say ETF?
Even then, I think despite the tax difference, because mutual funds are cheaper in terms of the tax treatment. Even then, I think, look, I'm presuming that you will treat the ETF like you would physical gold, right? You will not
Yeah.
trade in it.
Yeah.
So then I think it evens out over a period.
And also one more thing, ETF, whenever you buy an ETF, I understand the organization buys a physical gold. So it is backed by an underlying gold.
Yes.
But in mutual fund is basically investing in a gold-based companies.
Gold miners.
Gold miners. So it is not a direct gold underlying.
Yes.
It's like gold miners.
Gold miners.
So there is that difference also. So the gold
Correlation.
price movements might not be truly reflected in the mutual fund. ETF, it will be like
Yes.
the same price movement is getting reflected in ETF.
Understood.
See, on that one, just one more thing to add. If you're very bullish gold, and if you get a correction, gold miners are probably a great place to go put your money, because look, these are guys who are just developing their mines. They don't have their output out yet, right? So you're bound to get more alpha out of there than from the physical gold itself. So maybe that's one point too. But look, in India, honestly, there are no gold miners as far as I know. So most of these investments go into the US.
Okay.
Not in the US, basically abroad.
Got it.
Some of them in the US and some otherwise.
Got it.
That's not a bad idea. I've not done it myself, so no experience in it, but not a bad idea.
Got it. When we are talking about gold and silver ratio, one very interesting metric comes to my mind, which is US M2 by gold ratio. So for our audience, I want to tell you is M2 basically means the money supply in the entire economy. So this is the total money supply which is in the US market, and we take US basically as a reference because there is much better data available there. So if you see if I go like 3 years back or 2 years back from where we are talking about the gold prices, the M2 to gold ratio was around 10, and now it has come down to 6.7. So it is basically saying the value of the gold is increasing in a much higher as compared to the money circulation.
Yes.
Basically, it also means the value, if I have to say simple one, the gold is becoming more and more valuable. At the same time, your gold and silver ratio has been more or less stagnant, I guess, or this has also moved in
It's moved,
connection.
because gold moved up so much.
Gold moved up. Okay, so very interesting. So you are saying that these will be like two parallel graphs. These will never be inverse in nature. These will be two parallel graphs. M2 to gold and gold to silver.
Yes, I would think so.
So
I've never looked at it this way. It's a very interesting way of looking at it. Look, some part of that M2 contraction is also because QT,
Tapering, right?
the quantitative tightening that's happening. Some part of it, but a lot of it is also because gold prices have moved up.
Got it. Very interesting. So I was having conversation with someone. It was more like, what is the maximum value of gold which can be increased in a day, hypothetically? Like the worst comes worst. So I used to go to this graph. Like today, the worst comes worst is when US says their dollar will be backed by gold. That is like the best for the gold price.
Absolutely.
So it will increase by 6.7 times gold price, and probably higher, but 6.7 is given because overnight the value of gold will go up.
Correct.
Rajesh and Priyan, you talked about buying gold, and your preference was ETF, right? I just want to understand: is there any instrument which is available to people in India that allows them to trade in gold? The way we do options, futures in currencies, equities, can we do the same thing in gold?
MCX has gold futures.
Multi-commodity exchange.
The multi-commodity exchange of India. NCDEX also has, I think, I'm not sure, but MCX is the largest out there.
Okay.
So you can trade gold
But
in Indian rupees.
do I need to take delivery there, or these are cash backed?
Then you can net settle.
Oh, we can net settle.
Net settle.
Okay.
It is cash back. Of course, you need a margin, but you can net settle too.
We can net settle.
It's not a great. It's not great for jewelers, for example. You ask any large jeweler who hedges, they would say their preference for hedging is first OTC, which is non-existent. 2 is the IBIX, which is the Gift City exchange.
Got it.
3rd would be MCX.
Got it.
So that's the problem. So but yeah, for retail traders, I think it's liquid enough. So it's volatile enough.
Okay.
Another alternative, if you really are into it, you have this liberalized remittance scheme, LRS,
Okay.
up to $250,000 per individual calendar year. So you can actually send money out. And there are exchanges outside India. There are brokers outside India who enable you to trade directly in XAU gold, which is gold to dollar.
Yes.
That's also possible.
That is also very interesting.
Very seamlessly possible actually nowadays.
But then you are exposed to dollar rupee
When you bring
currency
it back,
cycle,
yes.
when you bring it back.
But again, you're going long dollar, so it's
It's a safe trade.
so it's like
Yeah.
But yeah, the difficulty of that is that you can't short gold.
Yeah. Yeah.
You can only go long gold, whereas in MCX you can go short gold also.
Got it. Priyan, do you buy gold?
I used to be a big proponent of SGBs. In
Okay.
fact, I think I used to pressurize my partner to put as much as possible, everything in that, because it's too good to be true.
Yeah.
Even 10 years back.
Even
So-
10 years back. That's right.
That is fantastic actually.
Now I think I just do the ETFs.
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 Yeah,
So
I
your
put equal money in gold and silver. Naturally, silver has not done anything. So.
But you have not put money in mutual funds.
No,
Always
no.
ETFs.
And since you mentioned about should you invest in gold, one point was timing. The other thing is gold is like that. It's better than FD, right, for people because
Absolutely,
it
yeah.
takes care of inflation at least. So it should definitely be part of everybody's portfolio.
Yes, absolutely. See, even if you take the last 25 years, your average returns is 13%.
Yeah, that's true. But
Yeah.
if I look at a 100-year-old graph, like as you said, dollar has been there only for 60, 70 years, but gold has been there perpetually.
Yeah.
If I look at a 100-year-old graph, and if I simply do a CAGR from 1915 to 2025,
It will be negligible.
the return is like 1.6%.
Even if you take out the dollar rupee part, it's still probably 5%.
Yeah. So probably timing is very important. We can always keep on talking about a lot of asset
Yes,
classes, but
yeah.
timing is
Absolutely.
important.
And book your MTMs. And very difficult to get to your, for example, I'm sure your partner will never do it, right?
Yeah.
Yeah, so that's one difficult part about gold.
Yeah.
That okay, that's one good thing of being in ETFs.
Yeah.
You may not be as emotionally attached to it as actual physical
That's
stuff,
true.
right?
That's the emotional aspect of
Yeah,
owning an
yeah.
ETF. That's true. But if people start booking the MTMs, then they become traders eventually,
Yeah, that too
which
is
we
there.
don't want retail investors to be.
Absolutely, yeah, that too is
I
there.
mean, SGBs had this thing that you don't have to pay tax if you hold to maturity. So
Yes.
that's also there.
And there is a loophole, and you let me know if that is correct. So SGB's maturity is 8 years.
Yeah.
So if I hold till maturity, I don't have to pay taxes, which is right. But let's say I sell it after 5 years.
Yes.
The person who is buying from me, he will be holding from 6th year to 8th year.
Correct.
Apparently, he will not pay taxes.
Correct.
I will pay
You have to pay
taxes.
taxes,
He
yes.
will not pay taxes
Oh,
because
I
he is
didn't
the
know that.
one held till maturity.
And that option is still available now.
Yeah, and that is why SGB has a premium of 10 to 15% over other gold classes.
Oh, okay. Okay, I didn't know that. Okay,
Yeah,
okay,
that was
interesting.
very interesting.
Interesting.
So I checked multiple times to make sure, like, is government correcting that or what? But yeah, that's how it is.
Oh, interesting.
Perfect. So we are now moving towards the closing of our discussion, and I have this. Okay, this question is for both of you. Priyan, we will start with you. What is a widely held belief with gold that you don't believe in?
The hedge against inflation, I think we spoke about in the beginning.
Okay.
It is not really the best hedge. In fact, I checked the correlation
Again,
analysis.
as Rajesh said,
right?
Turkey will get thrown in your face.
No, it's okay. There will be exceptions, but the rule always remains, right?
Okay.
So as long as inflation is below 8%,
Okay.
gold is not there. Real estate beats it hollow.
Okay.
If it is above 8%, then gold outperforms real estate.
Okay.
So that is what I went
Can
through and
you
studied.
explain the reasoning for that?
So, empirical analysis.
Okay.
Reasoning wise, I think there are so many other factors which affect gold. Like we spoke about safe haven, for example. Real estate is not affected by that, right? It's not a true hedge against inflation. When you're looking at a hedge, you have to see whether it's a true hedge, right? There's so many other factors impacting gold, which may be positive or negative. So that way. And if in periods of low inflation, obviously you have risk assets, which are better.
Got it. Very interesting. This is very interesting view. I go with those like flashy statements. 1 kg of gold was able to buy you Maruti Suzuki in
Yeah,
1980.
yeah,
it can
yeah,
buy you now
correct.
BMW. Is probably taking care of inflation. But yes, interesting.
Yeah, and there's one more point. I think there was this chart which spoke about inflation-adjusted price of gold.
Okay.
Right? If you look at it, say, I don't think gold price has crossed what it was at 1970. In 1970, inflation-adjusted.
Because they moved.
Okay.
1970, it was obvious because we had a
Exactly.
gold-based economy.
Exactly.
Right.
And then they moved to fiat, so it couldn't keep terms with it.
Yeah.
Very interesting. Rajesh, what do you think? Which is that widely held gold belief which you do not agree with?
That gold is a safe asset. It is, of course, safe. I mean, since,
Okay.
It's of course safe. It is there, But it also depends so much on timing, right?
Yeah,
So you
that's
can buy gold today at $3,500 and end up holding it for the next 5 years at
It is,
$3,500
yeah.
and lose what 5 into 6, 7, what 40% in opportunity cost.
Yeah,
Right,
that's
so-
true. Then,
that's-
according to you, which is the safest asset which you would like to be? I will always be long on this asset.
Okay, good question now. Land.
Land. Yeah.
Yeah, so land, look, they're not making that stuff anymore. So we are done with supply. So I guess that's pretty much the only thing that you can say is a very safe asset, but then who knows? Your land can get flooded, landslide can take it over. So yeah, actually, there is no such thing as a
Got it. Very interesting.
100% safe asset.
But what about a country like China where government owns all the land? You just get it on lease. The same reasoning will hold true in that situation?
Then
It
I
won't,
guess
right?
the only option is to buy gold.
Then there is gold.
That's why the Chinese buy land in UK or US.
right.
That's true. That's true.
Right, and ask any Chinese how their real estate investments have done in the last 10 years, they'll probably cry all over
They'll
you.
probably cry.
So,
Yeah, this is one country which is like worse than India when it comes to real estate investments. Like in India, we pay so much of money upfront, but we don't get that kind of return. Like the rental yields are very low. China is even worse. They are paying the similar money that we are paying, but they don't own the land. They have it on lease.
they don't even own the land.
They don't have. Okay, so this is going to be a very interesting question. If gold has a personality, how will you describe it?
Where did you start? I can't think of okay.
I actually thought about it for a bit, okay? So all of you have watched Lord of the Rings, I hope.
Lord of the Rings.
So
yes.
you have Gandalf, you have Aragorn, you have Frodo, all kinds of personalities. But for me, gold is Samwise Gamgee, the guy who's always
Dependable.
there for you, dependable till the end. You can just trust. Not going to be flashy, not a hero.
Very
but
interesting.
Will be there.
Yeah.
Yeah,
And for
dependable,
Rajesh,
yeah.
Samwise Gamgee is the land. This brings to the close of the episode. Hope you enjoyed the conversation. Gold has always been a talking point for centuries, yet normal people do not understand what impacts the pricing of the gold. Of course, we know that during turbulent times, during uncertain times, gold prices go up. But what are those underlying factors which impact the gold? Many people do not know. That's what we try to demystify today. I hope you like this. If you want us to cover topics similar to this, do let us know. Thank you very much.